This is Colin Cattell with Palisade Radio. On the line with us today is returning guest Jeb Handwerger. Jeb is the publisher of Gold Stock Trade's premium subscription service. Jeb, thanks for being with us today.
Colin, it's a pleasure to be back here with you.
Earlier this week, we saw a sizable decline in the gold spot price. Meanwhile, the HUI index has gotten pummeled and is down around the 200 level as we record today. The uranium spot price is at $28.25. It looks as if we're going to begin testing several of the December and July lows of last year. What is your feeling about the current price action in the metals and the HUI index?
Well, to be quite honest, short term, Colin, it doesn't look pretty for gold and silver, and we are going through the customary summer doldrums, which I call them, or doldrums, where gold and silver decline, and they sometimes reach a bottom, actually right in the summer months, sometimes in the middle of the summer, between June or July, or between July and August, if you look back at previous gold and silver rallies. So we may be headed for that over the next few weeks. We may be bottoming, going through the bottoming process right now. The sentiment is extremely negative, like we saw in late December of 2013, and that usually sets up for a rally that comes in the fall. In the gold and silver market, we're having a short-term correction, which might be good for some of those long-term investors. But in other areas in the metals, we're beginning to see some strength in certain metals that I've been talking about pretty much since the end of 2012. In palladium, which is almost breaking through the $850 mark. Nickel's up over 50% in 2014, and platinum is also outperforming gold, and so there are some bright spots in this year in 2014. There's definitely been some areas that some investors have have gains in, and gold and silver right now and uranium are pretty much the commodities that are in the base mode or the bottoming mode, which may be a good time for investors to begin analyzing, the top stories in those spaces.
In a recent article you published on your website, you mentioned that the smart money in the uranium space and overall junior resource stocks are potentially doubling down right now. And you said that the deeper the spot price goes and the deeper these stocks go, the higher they will ultimately go up. Explain your thought process here.
Oh, I think uranium prices are irrationally low. Most smart investors look at basing periods to accumulate. They look for, capitulations where negativity is at an extreme. And if you take a look at the long-term fundamentals, most smart or intelligent investors realize that the long-term picture for uranium remains very strong. Remember, Colin, there's more nuclear reactors being built today and operated right now than before the Fukushima incident. And the supply from mines is, because of the slow spot prices, declining every day. We hear about it, pretty much almost like on a weekly basis, of Cameco or Rio or Areva shutting down mines at current prices. So these mines are losing propositions at these prices. So we're seeing them cutting back these operations, these mines at these low price levels. Well, when the price starts picking up again, it's very hard to bring these mines back online. And that's when the contrarians buy, is when actually the big guys are having to cut back on operations. They realize that there's a lot of money on the sidelines. For instance, Uranium Participation Corp, which is the symbol U on the Toronto, they raised like over $58 million to buy spot uranium, but we haven't seen any buying, really significant buying in the spot uranium price since they've made this raise. So there's maybe a lot of cash on the sideline, and when the buying and the rally begins again in the uranium, spot prices, I expect a lot of these miners that are trading at really undervalued to begin gapping higher.
Germany and Japan both shut down reactors following the Fukushima incident. What are you hearing about the nuclear sector in those countries at this time? Do you expect that reactors will begin going back online shortly?
Well, Japan has already come out with a plan that puts nuclear as a baseload power. They realize that they have to turn the nuclear reactors back on soon. They can't afford to import record amounts of liquefied natural gas, which is almost 4 to 5 times more expensive than what the Asians pay and than what the North Americans pay. So Japan can no longer do that. China is making a major IPO with China National Nuclear to raise money for expansion of nuclear power as well and construction of nuclear power plants. And that's signaling to me that nuclear continues to remain a key baseload power source. But I'm also expecting that Germany, who went away from nuclear after Fukushima, that they're going to have to make a turnabout because they've had to rely on imported Russian natural gas through the Ukraine. We all see what's going on there between the Russia and the Ukraine, and the EU is becoming dependent on skyrocketing electricity costs, and they can't afford to do that any longer. The tensions and sanctions with Russia has left countries like Germany in a vulnerable situation, and they may have to rethink nuclear, just as the Japanese are doing now, and come to the reality that it's either nuclear or some really dire economic situation.
Let's look at the commodities that are moving up. You've been writing a lot about nickel, which is up about 50% over the past few months. Copper and the PGMs are also exhibiting some positive price action. What does it tell you that some of the industrial metals are moving up while the precious metals are dropping?
Well, I think that one of the reasons why the precious metals is dropping is because there's this sentiment that the economy is doing better. Well, that may not be as good for gold because of rising interest rates, but it may be good for the industrial metals, which we've seen a lot of different sectors rallying so far in 2014. As you mentioned, the platinum group metals, palladium, nickel, platinum's outperforming gold and silver. Another area is the lithium and graphite market. There was big news in 2014 that Tesla is planning to build the world's biggest lithium-ion battery plant in the western U.S. This was able to give a little bit of a boost, but I think to the junior lithium and graphite miners. But I believe it's a game changer, and that there's going to be a significant increase of demand for the lithium-ion battery market, which is growing rapidly over the next decade. And nickel, back in December, nickel was like a bad word in the commodity space, but that's when I actually started investing in the space, and I started telling my subscribers about nickel because I saw that Indonesia, which controls about 25% of global supply, was going to institute an export ban. Well, they did that in January, and that's the equivalent of like the OPEC nations, the Gulf OPEC nations cutting back on oil. And we've seen a significant increase in nickel from around $6 to as high as $9.50. So some of the junior miners in these areas have doubled and tripled. So the junior mining space, although in general the markets have been declining, if you're doing your homework, you can really uncover some really impressive gems in this sector, and luckily, I feel blessed to have been able to share some of those success stories in 2014 with my readers.
You know a lot of long-time investors in the commodity space, and they've told you that this 3-year pullback is unprecedented in terms of the value available to investors at this time. Before we hit record on this interview, we were discussing that when these markets rebound, it is oftentimes too late to pick up the shares in some of these juniors. The offers very literally dry up, and the prices of these stocks can move up by several 100% in a very short time period. Talk to our listeners about this.
Well, the reason why we invest in the junior mining sector and why we invest in the earlier stage mining companies is because we realize the potential that can, if a company is successful in reaching these milestones, the amount of value that can be created for shareholders. In previous junior mining markets, a 10-bagger or a 30-bagger was not entirely uncommon if you found a discovery. Right now, what's popular is dividend, is yield. So people are flocking to the dividend blue chip large cap stocks. Well, and they think that's the safe haven. Well, when anything that's inflated, when everyone's chasing, a certain sector, that becomes inflated. The risk to reward is not as great as what we're seeing right now in the junior miners, where we have historical low valuations, and at the same time in the equity markets we're seeing ridiculously high overvaluations. So the smart investor who has a long-term approach and looking at the fundamentals would rather look for opportunities where you can buy assets that are trading at discounts to their book value, and we're seeing that throughout the commodity the junior mining resource space, and at the same time, many of these companies are trading at levels where all the work that they've been accomplishing over the past 2-3 years of advancing technical studies are completely ignored. Well, that's the best time to be able to pick up these assets, is when you see companies with resources or have put millions and millions of dollars into the ground, but the market for some reason is valuing them at 1/3 of what they were worth a year or two ago.
Jeb, you mentioned that you've been able to identify some winners in 2014. Can you share a few of those with our listeners?
In late 2011, I found an asset in Nebraska that looked even better than IM Gold's Nilebeck project, as it has this higher grade niobium. And I recently highlighted it to my subscribers a few months ago, and interviewed the CEO, Mark Smith, and the stock has made a phenomenal return, and has gone up from about 20 cents to about 60 cents. Another company which I mentioned to my readers and have been researching for years is this world-class lithium asset located in the miningly friendly and supportive, stable jurisdiction of Nevada, owned by Western Lithium, and it could be one of the major lithium suppliers to battery factories, such as the one that Tesla is planning to build. Another company which has had significant success has been Nucor Rare Metals, which Alaska, the state of Alaska, has issued bonds for the construction and the infrastructure of this heavy rare earth deposit in Alaska, which could provide thousands of jobs, for the Alaskan community, and the bonds will help the company finance the costs. So there's been some very significant positive developments in 2014. If you do your homework and find the companies that have the assets, the management, and the financial wherewithal to be able to withstand this bear market.
Jeb, thanks so much for taking the time to talk with us today. Let's hope that this is the final decline in these junior stocks.
Thanks, Colin, for having me here.